Now, my next guest is a regular to the show. He brings many years of expertise in both the property markets and as a political analyst. We have a lot to talk about today to sink our teeth into. And I've been watching him on the monitor. He's in deep thought. He's been gazing out the window, 1,000-yard stare. Ashley Church, good afternoon.
Hey, so when you say I've got many years of experience to draw on, what you're basically saying kindly is that I'm old.
Well, yeah, exactly. No, it's fine. But you're in deep thought today, Ashley. You look like it's a day you've been thinking about a lot of things, which is good.
Oh, yeah, but it is one of those days. Beautiful day, to be fair.
Is
Beautiful,
it?
lovely day here in Auckland. It is. It's
lovely.
Gorgeous. But
cold starts though, from my memories of the Bay in winter.
Yeah, but that's good. That's all part of the charm of the region.
Yeah. Nice crisp start. All right, let's jump in. Let's start with some good news and we'll work our way down from there. Good news from a couple of major banks. I think three now. I think Kiwi Bank came on today, but BNZ and ANZ have all reduced their home loan rates in anticipation of the Reserve Bank's upcoming OCR decision. Ash, I believe, is this a third rate cut in the current cycle? And the lowest being offered so far, how low can they go?
Well, there's actually a bigger issue at play here. And to be fair, I don't remember if what I'm about to say has always happened or whether this is a relatively new phenomenon of this round of dropping. But you'll note that the commentators are talking about a 0.25 cut. And the last few cuts have been 0.25. There was one of 0.5, which in layman's terms means 0.25% drop in the OCR. But what the banks have done, quite cleverly I might add, over the last 3 or 4 cuts, is that they have actually preempted the OCR announcement by a week or two and instituted a cut themselves. But, and here's the key, here's the kicker, their cut is less than the 0.25. So for example, the latest one with the BNZ, I think is around, it does vary on various different loans, but I think for most of them it's around sort of 0.1, maybe 0.15. And the reason I think they do that, and then what they do is when the OCR cut takes place, they then come out, and I've done this the last few cycles, they'll say, well, we've already factored that in. We've already made our cuts. And so what they're basically doing is they're banking the difference between the cut that they made and the OCR cut that was actually made by the Reserve Bank. Now, to be fair to them, there's not a direct relationship between those two things. So it would be fair of them to say, hey, just because the OCR's come down, it doesn't necessarily mean we've saved that amount of money, but they are funding their loans at lower and lower rates as they refinance these large blocks of funds offshore. So it is a little bit cheeky on their part, and I'll be very interested to see what they do next week or the week after when that OCR announcement comes out, if it is indeed 0.25.
Is that what we're expecting? 0.25?
I think so, yeah. I think we're expecting 0.2. It would be unlikely to be nil, but it would also be unlikely to be higher than that at this stage because the Reserve Bank wants to keep a bit of fuel in the tank.
Yeah, sure. Do you expect then cuts to stimulate more home buying or property investment?
Well, the normal answer would be absolutely yes. I mean, a cut would normally be fueling economic activity across a range of different things, including house buying. The fact that it's not, and the fact that we've had some quite dramatic cuts over the last sort of 18 months or so, and we're really not seeing much change in economic activity is quite bizarre. And it's probably an indication of a couple of things. Firstly, what's going on in the world economy with our friend in the States who sort of, changes his mind as often as he changes his underwear.
I don't know if he does.
And
his pull-ups,
an example. And secondly, just the fact that I think that there's concerns about jobs and a range of other things that are going on. And there's kind of this, it's a bit like being lined up on a line at a race where you're waiting for the starter's gun and you're looking at the other races to see who's going to bolt first. There's a little bit of that going on as well. So once it starts to happen, and it will, then we will start to see growth in economic activity. But when that starts going to take place is anybody's guess, Leah.
All right. So any advice then for homeowners who are maybe refinancing soon or even looking at buying? Or would you say go for a shorter, we've had this conversation before. Do you go for a shorter rate, which is more expensive? Do you go longer, lock in something for a year? What do you do?
Yeah, interesting. I'd be looking at 6 months to a year max. I certainly wouldn't be looking out beyond 2 years. And I, so the balance between getting the best rate possible and by the same token, not wanting to lock yourself in for too long. Because what the banks will do, and this latest round with BNZ is a really good example, is the 6 month rate actually the highest. And the reason for that is because they don't want
Yes.
people to lock in 6 months.
Yeah.
They want to get the current rates for longer because they anticipate rates to come down even further. So by
Yeah.
locking those rates in for longer, they're extracting a little bit more from their customers before those rates drop. So keep that in mind. That's an indication, a weird indication, but it's an indication from the banks that they actually expect interest rates to continue to fall.
How much power do we have now, Ash? Like when, can we jump banks? Because I've had this conversation with people in the property industry, and they've said,
Yep.
you're in the driver's seat. Why don't you just say I'm going to swap banks completely and take my debt with me?
Provided you're doing it in a period when your loan is
Sure,
not fixed.
I know what you're saying. Yeah.
So if it's on a 6 or a 12-month rate, you'll have to wait that rate out first. But once that comes off the fixed rate, you're in that period, that grace period, basically, where you've got the choice of being able to ship it around and take it elsewhere.
How common is that, Ash, that people jump from?
Pretty common.
Is it?
There's a lot of loyalty in the banking system. But keep in mind, in any given year, there are a lot of new people coming into the system by dint of the fact that first-time buyers are coming in and buying homes for the first time, and that figure can be as much as 24-25% of the market in any given year, which means that there's at least 25% and probably higher of loans being turned to new banks, and arguably, particularly among more informed borrowers, people who are constantly looking to see where they're going to get the best deal.
Yeah. Okay, so let's stay with us just a little bit in the property vein. Things are a bit quieter at the latest auctions. There were 236 residential properties auctioned around the country last week, a little dip from 282 the previous. However, although fewer properties are on offer, there was no change in the sales rate. 94 properties selling under the hammer, giving an overall sales rate of 40%. Ash, 40% does not sound like a very good number to me. Is that normal for this time of year? Is there a bigger picture going on?
Yeah, well, there is a bigger picture. So it's important to note that these figures are of limited value unless you could extrapolate them out to a bigger picture, which is how many properties are being sold in the market overall. So these are just auctions. Yes. So what they don't tell you is, are there more property? Because there's lots of other ways you can sell property other than auction. Yeah. What it doesn't tell you is, are there other ways that I could be selling property? I've forgotten some of the terms now, but buy offer over as one method. Deadline treaty. There's a whole range of them. So does this figure tell us that people are deciding not to sell by auction and instead sell in some other way? Or are those numbers the same, and therefore this is indicative of a change that's taking place? But putting that aside, 40% is a percentage of the total value of property sold by auction. That's I don't know what that figure is historically, what the high is, but that's probably reasonable in the current market, because remember, an auction is essentially an offer to people in one room to say who wants to put their hand up and pay the most for a property. And in the current market, there's not a lot of urgency that's actually going to encourage buyers to do that. So if a buyer's expectations are here and you're in an auction room and you're only going to pay here, then you're not going to buy the property and it's going to be passed in, which probably explains the 40%.
Yeah. Is an auction then, because I remember, I don't know, 10 years ago when we bought our last place, auctions were the way to go because everyone was scrambling, right? What do you think is still the best way to sell a property in this market?
I was just going to say it depends on where you are in the market, and real estate agents hate it when I say this, but auctions are a powerful tool in a hot market. So if you're in a hot market where houses are selling really quickly and there's FOMO, fear of missing out, auctions are fantastic, because the whole point of an auction is to get as many people as possible together in one room and get them competing with each other. And when they see somebody who's offering more than them, there's the temptation to put your hand up and pay more. I think they're a dog in this market. If you're in a market where there's no demand, what's an auction going to achieve? Now, there are some real estate agents who will say to me, yes, but they use it as a tool. Even if there's only one person in the room, it's a way of then taking that person and negotiating with them to extract an offer, which may not be as much as the reserve, but which is at least going to get a sort of a meeting of the minds between the buyer and the seller. But in general terms, I think in this market there's better ways. And as I say, real estate agents, a lot of them will hate me for saying that, but I think in this market there are better ways of selling than auction. I think it's a particularly weak tool in a weak market.
So you just do like an offer over. maybe.
Yeah, whatever of those methods. There's lots of different methods, and there's lots of agents out there who actually are. What you tend to find is that agents tend to have a way of selling that they're good at. They become specialists at, and
Oh,
so
so
if you
that's
can
what they always
match
go to.
your
Mm.
yeah, so if you can match that to your auctioneer, sorry, to your real estate agent, and you've got the right person, then it kind of doesn't matter what method they use. It's the fact that that method works for them, and therefore for you as the vendor.
Okay, gotcha. All right, let's move on. Ash, from the
Sure.
podium of truth, no
Aha.
shows. Jacinda
Ah.
Ardern, Chris Hipkins, Grant Robertson, Aisha Verrill, they've all opted out of appearing before the public segment of the COVID-19 inquiry. They've cited that they've already given private evidence. The inquiry chair agreed not to summon them, and the coalition parties have condemned the refusal as evasive and undermining accountability. Ash, do we not deserve to hear directly from those who made key decisions, the decisions during the pandemic?
Oh, look, we absolutely deserve to hear, and this is disgraceful, Leah. And let me put some context around this. So the excuse that's being used, I listened to Hipkins this morning bleating again about his rationale for this. The excuse that's being used is that they've already provided the information that was required by the Commission, and they've already answered the Commission's questions. Therefore, they have met the obligations of the Commissions. Now, at one level, that's absolutely correct.
Mm-hmm.
The bit that they're missing, and I think they know this, they're just choosing to willfully ignore it. The bit that they are missing is that the whole process of a commission of inquiry isn't just about the questions being answered. It's about, for want of a better word, the theatre of people actually being able to see them answer those questions. Now, to give some context to that, if you go back to Nelson Mandela's period starting in the early 90s and the history of South Africa and apartheid that existed before that, Mandela very wisely introduced something called the Truth and Reconciliation Commission. And the purpose of that commission was, yes, to answer about some of the atrocities of the things that have taken place under apartheid, but it was also to bring the country back together and to actually see people who had made some of those decisions, committed some of those atrocities, actually be answerable for their crimes, for the things that they had done. Now, what that did was, and Mandela was a very, very smart man, what that did was it basically avoided what could have been bloodshed. It could have been Zimbabwe 20, 25, 30 years earlier. But Mandela took that smart approach. Now, you might say that's an extreme example. It's not an extreme example at all. That period between 2020 and 2023, it doesn't matter where you are, it doesn't matter where you sit on the question of whether COVID, deserved the action that was taken, and whether, vaccination and all that other stuff that people debate over, put all that aside. It was a period of totalitarian government in this country, unlike anything that we have seen in our history. And there is a requirement and an obligation for the people who did that to answer to the country publicly and to front up. And yes, there's an element of bloodletting in it. Yes, there's an aspect of that which is about people actually being able to vent their spleen, but that's the whole reason that you do it. And by taking that away, you are taking away from the country part of that process of healing that commission was designed to actually achieve. And the problem I've got is you've got this guy, Hipkins, who's saying, I want to run your country again. I want to go to the election next year. I want to run your country again. But I don't want to answer for the stuff that I did 2 or 3 years ago. Go away. I'm not going to answer those questions. That is disgraceful.
I mean, and I'm glad you said that, because, I mean, how does he wants to come back into power. Does he not see this as a very bad look if he's not going to answer?
Yes,
well, he was grinning at the cameras last night saying, hey, they ran out of questions for me. I'll answer anything. Hey.